It's a good time to start. So good morning to everyone, and a warm welcome also from my side to the second day of this year's Digital Finance Conference. It is a pleasure to be here, especially since it's an in-person conference after 2 years of being only seen virtually. We are here on the innovation stage, so just keep that in mind. And as you may have seen in the program, we will have again, as you may have already heard, 2 stages and thus a parallel running program. So while I'd be happy if you would follow the discussion here on this stage, as I think it will be fantastic, I promise this, you're welcome to check out regularly out the program on the other stage as well. My name is Verena. I'm the head of the EU's EU office of Bitkom, and it is my great pleasure to guide you today through the interesting and exciting program. Yesterday we started already the program actually with a really interesting keynote of the Parliamentary State Secretary, Dr. Florian Tonka, followed by, I think, an insightful and very vivid discussion as well on the current and future digital finance situation in Europe. I'd say it was a great start, and I can assure you that today's program will be equally good as yesterday. So be ready for a full day of interesting speakers, pitches, and panel discussions covering the recent developments in the digital finance sector. Here on the innovation stage, we want to take a closer look at the recent developments in innovations in that specific sector. We want to take also a look at the regulatory framework and at the cybersecurity issue. This and more will definitely be discussed today here. So following, I think, a valuable advice of Benjamin Franklin that time is money, I will stop here and we'll actually start the program of today. And I would be also thankful if we all could stick to the schedule, kind of, to make the most out of it. So our first panel of today will discuss the new challenges for FinTech grown-ups, and we'll especially take a look at the growth perspective. So this panel will be moderated by Kevin Hackl, who is the head of digital banking and financial services at Bitkom. So let's welcome you on the stage.
Thank you very much.
So before I leave the stage, Kevin, you have an interesting panel today. Are you excited to moderate it? To start I'm
very excited. Well, first of all, I'm very excited to actually do this in person again. I had to do this last year on the screen. It was really not cool or anything like that. It's not rewarding if you do the entire program and then do it virtually. Then it's done and you ask yourself, okay, what's going to happen? So I'm pretty much looking forward to all the conversations we're also going to have off the stage. But now, let's jump right into the topic. I mean, it's, I think, just so interesting times for FinTechs. I mean, if you have a look at it, we have grown-ups now. So FinTechs are no longer, this 5-person startup in Kreuzberg, Berlin, but they are real large companies and are still growing. So what we want to do today is seeing some sort of new wave of FinTechs to discuss this a little bit in more detail. And I'm very pleased to welcome our panelists today up on stage. So first of all, maybe Verena, let's start with you. Verena, Chief of Staff from Raisin, happy to have you.
Hi.
And next, I think also a very familiar face to the ecosystem, Aiga Senftleben from Billie. Happy to have you. Yesterday at Hinterland, today at Digifin. Thanks for taking your time. Stephen Voss, I'm pretty happy. Also have an InsurTech up on the stage. Very much welcome. And last but not least, Jan from BCG is gonna give us some outside perspectives today for this discussion. Have a seat, a very warm welcome. Maybe to kick it off, I tried to have it in the introduction a little bit. I mean, times have changed. FinTechs have grown up. None of your FinTechs are like something that was founded like just a couple of days ago, but rather grown-up businesses. So what I would be interested to start with, currently, what's the most pressing issue or the biggest problem linked to further growth within your company? Stephen, maybe starting with you.
Yeah, thank you. I mean, one of the big challenges right now is that now that we are grown up, we get so many projects brought across to us that we have a staffing issue. We need more people, we need more technology in order to fulfill the needs of the market. And that's a major issue, because you can't get as many people as you have, and you need to grow in order to pay for these people too. And that's a big challenge for us.
So getting the right talents, I think all of us in here would agree to that. Aiga, do you have the same problem or another problem you would say is number one on your list?
I think we can already see a change in this, especially on the talent side, at least in Berlin. I think in the last 4 weeks, things have significantly changed. The wind has changed, as I'd say. There have been quite a considerable amount of layoffs. I think Billie is not affected and won't be, but I think people, this will make it a little bit easier to hire people. And I think we rather in the short term, we see this, it's not only about layoffs and these things, but also, I mean, VC money is a little bit tighter. People are already looking at looking a lot more at the valuation. We won't see the times that we had last year. We won't have these valuations again. So there will be an interesting time, maybe time for consolidation. However, looking a bit mid and long term, I don't think this will be a problem. I think this is a very normal thing that happens. We had years and years of growth. Valuations went up. Everybody could start a company. People were merely short of staff in the end. But now, this I think we're going to see a course correction. Hopefully, not much longer than a year. But then I think if we're thinking about what are the problems for growth, it's the old things. If we want to really start and have innovation from Germany, we have to really look at regulatory setups that we have that makes it a problem. I think here, especially in the war for talent, we have the problem that our employee incentive schemes are just not comparable with other European markets, right? They're taxed very differently. If I speak to senior people from other countries, they were like, wait, how does this work? So here we have to get new schemes in place so that we can be attractive employers and get the best people also from other countries.
Yeah, thanks for putting that on the plate, and thanks for addressing some sort of the elephant in the room. I mean, we heard what's happening in the last couple of weeks. Gonna touch upon this a bit later, but to finish the introduction, Verena, do you have anything to add? So we had talents, we had regulatory issues, VC money, of course. Is there anything else you're thinking of that is worthwhile addressing today?
So what I have observed is when you're moving from a startup to a grown-up, there is always also two challenges that come along your way. One is organizational change. So how do you scale from being 50 people to being 500 people? And what does that do to your organizational setup, your culture? Bringing along people on the way, is the mission, is the product, is the drive still the same? And is your whole team aligned behind such a vision? So that is one thing that I have observed. And the other is you need to grow. And growth is fundamental. Growth is our currency. How do you grow? You are starting to enter new markets. You are expanding products, markets, geographies. And not always this is truly matching to your core proposition. So what I have seen and what we regularly assess at Raisin as well is what we are planning to do, is this still aligned with our vision and mission and purpose at heart, or do we need to correct course? And that is also something that is a part of not being a startup anymore, but being a grown-up, assessing what have we done, what are the products that we have in place, and are they still delivering on the business cases that you think they would deliver upon?
Very interesting. I think this just hits the needle of what we want to discuss today. So what are the tweaks you have to make to actually remain successful? Maybe Jan, to finish off with this short round of introduction. You heard plenty of ideas or plenty of interesting topics for increasing growth. What is your view? I mean, you analyze the market, you work with a lot of companies. Do you have a similar assessment?
Yes, definitely. I can fully second all the points that were made. I think right now for this year, I think one very important thing is to make yourself as independent from external funding as possible, and maybe to accelerate the speed for hitting profitability, because just capturing market share, growing on the revenue side might have been a good thing for the last years, but actually I think what we're heading now will be a bit of a bumpy ride. So I think it's a good idea to really fasten your seatbelt, stay healthy, stay strong. And I think for this to work, it's pretty important to be, well, a strong company on your own that does not overly rely on external funding.
But isn't this very conservative approach and actually going completely against let's build big, innovative worldwide companies, right? It's kind of like it's, okay, let's be afraid, let's immediately correct course, let's stop growth. I don't think that's necessarily good if you want to go the next level, apart from just being an okay company, but just actually changing something.
Yes, definitely. But I think in this year, the FinTechs and the grown-ups will have to balance. Actually, when we are observing the market, last year was a terrific funding market. It was like triple from what we have seen in 2020. That was awesome. And this carried on until first quarter this year. April funding levels on a worldwide level are roughly a third lower compared to last year. And May numbers are a bit too early to really nail them, but it looks like minus 60%. So yes, this might be a good thing, but if the money is not coming in, you have to make sure that your company survives. And I think this has to be prior one. Maybe not for each company. That's not what I'm saying. If you are healthy and so on, just keep growing. So. Yeah.
No, I'm just saying as a general trend, I think the European or especially the German companies were always a bit more conservative. And if you look at American VCs, they were going like crazy like this, and they're also going now like this, right? They're the first ones pulling the money out. Yeah. However, shouldn't we as European like VCs and on the entire ecosystem stay a little bit more in the balanced thing and now not also just completely course correct? Just because, I mean, Klarna is doing it now, but Klarna, before then, they've sponsored the Super Bowl. They're burning millions and millions per month. Just because they're doing this doesn't necessarily need to do. I wouldn't want to tell every startup and scale up now, make sure you try to become profitable. Because if they do that, then they will just stay within Oberbayern.
But what then I think... A great point, but what then actually makes a difference? I had last week I was at an office of a FinTech, which is a member of us, and we had the same discussions of what's gonna happen. Aiga, you mentioned the market's gonna tighten a bit, maybe for a year or so. Let's hope it's not longer. Layoff stuff like that isn't nice. So my questions are two: what makes the difference? Is it what you've done in the past? And maybe, I know this is not linked to you, what does this mean for new ventures to be found? Will money rather be allocated to working business models? I mean, 3 of them are sitting here. And what does this mean for aspiring founders? Will we see a backlash in Germany, maybe even? Verena, do you have a view on this?
So I personally believe that two things will be important, and both Jan and Aiga have touched upon them. So profitability is definitely something that investors will look at this year, but it depends on where you are in your growth story. whether you are a startup and you have just been founded, nobody will expect you to be profitable immediately. They will know that this is an investment case and it will take some time, but money will be tight for such startups. And it will be difficult or the competition for that kind of VC money is going to be a lot more intense. Now, if you're rather on the grown-up end of the spectrum, here KPIs such as what's your way to profitability or profitability already shown in financial accounts will become much more a topic of discussion if you are currently in a fundraising round. And if you're not there, what's the path towards it? So what have you done? How are your products performing, your solutions? How's your cost base evolving? How's your personnel costs evolving? How much do you, so to say, spend per head, and what's sort of the return in terms of revenue and top line? And I think this will be more trickier discussions. On the other hand, we had a couple of years or 2 years, 3 years ago, you would have heard some war stories of startups or FinTechs that said, I didn't even send over the business case. I just said them, if you want to invest, you just have to sign blanco. And we have seen such deals. Here the environment definitely has changed, but I don't think it's for the worse.
Well, actually, that would be my question looking back. Do you think this may also, it sounds very American now, this could also be a chance? I mean, it's difficult times for so many, so please don't get me wrong, but may this some sort of market correction, let's say, maybe for business models that had no viable reason for being there? I see you nodding, but Stephen, maybe.
I'm fully behind it. The point is that we see now a correction in the market, and we, as we sit here, we are grown up. So less money is going into stage A or stage B. So now investors are looking into the grown-ups that do have kind of their profitability in shape. Obviously, we need to do and we need to demonstrate that, but we have more interest now in our company, which used to be, we are an insurance company, we're boring as hell. But now we have a stable business model, we do have certain big clients, and this is now attractive. And before, the money went in some crazy idea from 3 youngsters, which perfectly fine, and I think we still need to promote this. But as you said, being very American now, the roller coaster is now going in towards our direction, which is currently good for us if we can demonstrate that we have profitability in shape and that we can manage our expenses.
Yeah, so risk appetite has changed completely.
Totally agree.
But I'm not sure if it's for the better. When we talked before, Stephen said to me, look, I couldn't have started this company now, right?
True.
And this is a company that works well, and that's not good. Right?
Yeah, that's why I said we need to still promote the entrepreneurs.
Yes.
But in favor of your argument, you're right.
Yeah, and there's still the money is in the market, right? The funds still have a ton of money that they need to deploy. So what they're going to do, they're going to look at the bit bigger ones, the scale-ups, and these scale-ups they will probably buy your company that has never been started because of these things will happen. So there will be a change of where it was now, but I don't in generally think, for us, it might be favorable, but I don't know for the ecosystem and not necessarily, especially with rules for insurance. They are just so, the regulation around insurance, and I don't know much about it, are so complex that I think, you would never tell anybody to start their own company with a new view, but say, start with work with Stephen.
Yeah, as for the marketplace, these are not good news. Just be perfectly straightforward, because what we currently do is we prevent newcomers with new ideas to start new businesses in this very country. I'm not even saying Europe. I really mean Germany, because a lot of the VC money, even big insurers have a lot of money they spend on new ventures. It's going outside of Germany. It's going into different countries. And
it's an interesting point, and I think it's not only linked to the current lack of money, let's put it that way, but also to other reasons. Regulation, supervision. We heavily within Bitkom, you know that quite well, deal with it a lot. What are you thinking we're losing ground? Really? I think always this may be a tipping point, where some decisions are going to be made. What do you think will the role of Germany be within the next 2-3 years? Because the way I get it, but correct me if I got it wrong, it's rather a backlash than a move forward, which we are currently seeing.
I probably agree. I don't know if it's a tipping point, but I do think that a lot of startups are considering moving the headquarters away. For example, I know Raisin, you guys, in order to KYC your customer, have to do much more than anybody from any other member state within the European Union have to do, even if that other company from maybe Sweden or Luxembourg is doing that within Germany, right? That is discrimination against German companies by a German authority or by the German lawmakers. That is legal under EU laws, but it's actually really, really not helping. There are other companies that have their are now in Lithuania, in Luxembourg. I know that the Lithuanian supervisor has just hired 50 lawyers and said, if you have any kind of application, if you file for a new license, give us 6 weeks and we'll have the decision by then, right? That's like a measurable KPI from a supervisor. That'd be amazing to have. And that shows the ambition also to be there and to provide this. I once listened to the head of the innovation office in the FCA in the UK, and she was talking constantly about the companies they supported, right? This wouldn't happen in BaFin, right? That's not the way that they just approach the way and see this as an important part, like innovation companies as important for the ecosystem. So I think this is something where we've already seen changes. And I also think that the new government has very different ideas around this, but I think we have to still take that a lot further.
Yeah, so European harmonization doesn't mean it's the same across all of the member states. So this is what we all see that are working in a regulated business and that have business expansion outside of Germany as we do. It's probably a tipping point, yes, in terms of how competitive is the German landscape or how attractive is Germany going to be as the country to found new companies. I think in terms of the FinTech ecosystem, so there is amazing work that's been done, European FinTech Association, for example, but many, many more that are raising the issues, that are addressing them, bring them on the agenda. I think there is a momentum over the last couple of months that this is being heard or at least considered. And I think now we need to double down on making change happen, even across countries.
And if I may elaborate on this, it's not only Germany, right? It's Europe in its entirety, because we need to understand Europe as one market. If I start a company in the US or in China, I have a huge market in front of me where I can test and implement and actually scale the business already in there. We could have this with Europe. I mean, different languages, but I think that's the least problem. However, there's not only different languages, but there's a ton of different regulations if you actually want to scale your business across borders within Europe. And I think this needs kind of all endeavors to have this as a actually single market.
I think that's very interesting. Sorry, because we had this yesterday at a welcome evening, and it's so weird in some way, shape, or form, because even the regulator would say, I agree, it's not okay, it's not good for our economy, it's not good for our ecosystem. Somehow things are changing, however, too slowly. Maybe to also move on to other points, Verena, please add to this. What I would be interested in your honest opinion, if you were today to found your new business, would you move outside Germany, actually? Yes or no? Or would you stay here?
I like Berlin.
We did it in Germany and want to stay in Germany. And we are regulated even in Germany. I mean,
you could change that.
If you
can change that.
No, if you would found a new business with the knowledge you have right now, would you move outside?
Malta?
No.
You just said you couldn't start it in Germany, right? You'd have to go somewhere. I mean, yeah. Luxembourg is very good.
Then you have other issues. So, for example, Netherlands is also easier. France is not necessarily easier than Germany. Both countries, probably difficulties along the road. You would always be dependent on external lawyers. Okay, you are also here in Germany, but there sort of language barriers, etc. I mean, that is what makes it so difficult to just move to another country, right? So it's not everything is implicitly known because we have all grown up here, we have all done business here. So I think yes, theoretically it's quite easy to move somewhere else. With a digital economy, even more so, and some of the countries you've listed more on the on an sort of being a citizen sort of level, fully offering a sort of digital citizenship or e-government services. I think there is more to come on the business side of it. But until you are physically there is a need to be physically there. There's different hurdles, I believe.
Yeah, and it depends on your business model. Sorry to say that. I mean, if you have a strong customer base, you have the element of trust. And if you're not from the home country where you're selling in, this is an issue. For an insurer, not being domiciled in Germany is almost impossible, except you're a super group. I mean, then if you're a AIG, I mean, you're known worldwide. But, a Neodigital out of Malta or out of, Lithuania, they wouldn't have the trust element in the German market in such a specific area where trust
is really fundamental in terms of financial products.
Exactly.
Especially if you have to do, or if you are engaged in retail customers, and if it's not just a pure B2B product. And just to add on Steffen's point, why did we choose Germany as a starting, as the country to found a business? So our business model, we are a platform for saving and investment products. Germany just simply is the biggest market. So if you want to start in Europe, of course you start in the biggest market. You don't go for the small ones and then work your way up, but you try to make it in the biggest.
But then also I think this is very interesting where you have the business model where like Raisin Bank has or Solaris Bank has, that they kind of provide the regulatory suite for other fintechs. Isn't that something that would be easier to do from other countries?
Depends where you're banking. If you already have a banking license in Germany, or if you need to start from scratch somewhere else.
Yeah, true.
So maybe I think this discussion is great, but I think we have to move on to a few other topics, because we did some analysis. What's going right? What's going wrong? What's going right or wrong in other countries? Maybe Jan, looking now, so at grown-ups, what do you think? We put this on the plate right at the beginning. Are the main challenges or the tasks to do right to actually grow further?
To go further, yes. I think, not doubling my point once again, even for them, profitability is important, probably more than for the earlier ones, of course. I would say maybe a softer topic like maintaining a startup-like culture is important, because most of the people who decided to work for a once fintech no grown-up purposely decided not to join Goldman, JP Morgan, and so forth. And this gets a lot harder once you have reached a certain size. And also the economics are different, right? If you have joined a fintech as employee number 8 or 10, the financial incentives are a lot different than when you are employee number 1005, obviously. And so let's say some of the glow in the eyes of the early team is a bit harder to transpose to the large group. Yeah.
Would you agree? I mean, you're going through this process.
Actually, totally agree, because you have your starting group. We started with 21. We are now almost 90, and you need to transfer the spirit, still being, be a scale-up or a grown-up, still behaving like a startup, having this flexibility, the innovation, etc. And the other point is, now that we are getting bigger, governance comes into place. So you have the compliance issues, you have the risk issues, you have everything, that the two founders could manage 5 years ago, easily in an afternoon, has now become a department. And we are always looking at the incumbents and the big ones, and we are on the same path. We are basically going down the same route. I mean, we're a regulated company, and now I have to talk with a compliance officer before I visit a client. I mean, I've never asked anybody going to a client and talking about business with Aiga. Now I have to consider, is this something I need to discuss prior to going to her? And that's an issue.
Interesting. Maybe Verena, I think you joined Raisin 2020. What was your motivation? Was it working for a fintech, a startup, or what was the driver? Or do you feel the same glow in the eyes? I think it was.
So I already joined a grown-up, so not employee number 5, but a little farther down the road. So previous to Raisin, I was working as a consultant with McKinsey. Left as an associate partner, and what I was doing at McKinsey was digital business building, essentially. So helping banks to build on a greenfield in Europe, and you are never. So what drove me to joining a fintech is when you work as a consultant, and maybe Jan can sort of relate to this. You are part of the team, but at the same time, you're not part of the team. So I always use this analogy. I felt like a football coach. You are part of the game. You stand there. You are at the sideline of the game, and you're shouting in what to do and what not to do. Sometimes they listen, sometimes they don't, but you're not a player on the field, so you're not part of the team. And I wanted to be on the field. I wanted to be a player or a team member that is sort of going for scoring a goal, and that is why I joined FinTech and why I joined Raisin, but essentially what Steffen said before, it's hard to transpose what a group of the first 10 or 50 people felt when joining a startup once you are 500 or alike. And it's not just about building great products, it's also about building a culture. And something what
Absolutely.
Sort of Raisin has gone through over the last, let's say, 12 months is that had been in the news, so you probably know, we merged with Raisin merged with Deposit Solutions, which is effectively doubling the size of a company overnight, and suddenly having to build a new organizational structure, defining what is the culture of this company going to be, how do we want to work with each other. And as you all know, a merger is successful on paper before you merge, but actually getting it to a success is a lot about people and not so much about business models. And because this is all sort of, this you can do in due diligence, and you know about sort of financial factors, synergies, and so on and so on. The real success factor, in my opinion, is do you manage to get the team to work?
Very interesting point. And maybe Aiga, is it you as a co-founder, and Billie is growing fast as well, do you think you should even try to have like this first day at work spirit, or how do you approach
No,
this?
I don't think so, because it's just changed, right? It's very different if you discuss with 5 people or 10 people, everybody knows what they're doing. And let's all think back to this. What did you want to do? Grow, get more people in, right? So now we're like 170 people, and we're a bit nostalgic, like, oh, it was so nice when we were only 12. No, it really wasn't. The only thing we wanted was grow. And then things change, right? Because you cannot have the same way of communication that when we sit, I mean, if we'd all agree to go on an afternoon trip to this afternoon, right, we're very different if it's just the 5 of us, right? And that's exactly the same thing. So what you need to do is in just accept this growth, right, and the change of the culture, and then make sure that you put the rails in place so that, for example, mainly communication, I think, works. Because what the problem is, you were 10 people for the first, 4, 5, 6 months. You established a way to communicate between each other without really saying much, without writing it down, without actually telling to the rest of the team. If that stays and people join and they're suddenly 200 and they're like, still these 10 people kind of do their thing, then you have a problem, right? And that's not really a cultural problem, but I think this is mainly communication, and then also accepting as the founders and MDs that you need to now suddenly stand there and talk to the entire crowd, which is something that you haven't ever done before. So I think let's accept the change, right? It's what we all wanted, and make it work.
Very interesting. And I think that thereby you build the basis for the actual growth on the paper again. I mean, culture, communication. So what I would be interested in, I'm pretty sorry we're running out of time, but I'm happy to discuss this further off stage. I see you mentioned the merger. We know about cooperations. So what are the key goals for actual growth? This is also regional expansion. What is currently maybe on your plate, or what is to expect from your companies in the coming days or years?
I have a quick answer to that. So we're going to expand to Sweden and Austria in the summer, and then probably another country in this year. So internationalization, finally. Even more people, chaos, it'll be fine.
happy to come to the Viennese office one day.
Yeah, I have also a very quick answer to that because we're just completing our product range into motor business. So we offering car insurance from the end of this year, which is the main insurance branch in the German market. And if this works, we might go abroad as well. But first, make the product range complete in the German market because it's the biggest European market in terms of insurance, and then leverage and scale that to other areas. That's what we do.
Well, for Raisin, while everybody is aching about the rising interest rate environment, we love it. It means our products get better, and there is more great products on our platforms. So if you're hunting for good interest rates, I can highly recommend you visit us. We have already seen a steep increases and market development in UK and US. I'm expecting we're hitting the first 3% product in UK market for multi-year products probably this week, but that definitely in June. And I'm hoping to see the same development as well as in Germany and the rest of the continental Europe.
Well, fingers crossed. And maybe to end this, we started, I wouldn't say negatively, but with what is moving the industry currently. But to all of the endeavors, all the best of luck from my side, from Bitkom. I'm pretty sure you will be around for a very long time. Yeah, thanks for taking your time discussing this. And maybe if you're interested, or actually if you're interested to discussing it a bit more into detail, a colleague of Jan will hold a workshop on how fintechs, established players can learn from one another, can work together. I think cooperation, we heard it, is a huge leverage for the entire industry. So make sure to check them out in the workshop area. I think it starts in about 10 minutes, but also happy if you join on this stage. Thank you. And over to our host of the day again. Thank you.